a production of the Mesa Chamber of Commerce. Visit us at mesachamber.org.
Okay, good morning, everyone. We're going to go ahead and get started. Happy Friday. I'm Sally Harrison from the Mesa Chamber, and I'm going to go ahead and turn this over to James Christensen. He is a board member with the Chamber. He is also our chair for this committee, and we'll do introductions. So, James, all yours.
Great. First of all, welcome. So thanks for being here and being online this morning. It's been a while, so there's a lot to talk about. It's good to see everyone on the call this morning. So should we go around and make introductions first?
Sure. Let's go ahead and start with Craig Lohman.
Great. Thanks, Sally. Craig Lohman, a partner with the Lohman Company, a CPA firm based in Mesa for over 20 years.
Great. Nathan?
Hi, Nathan Minard, representing BrightFi, a banking technology company based in Arizona.
Greg?
Sorry. Greg Mattern, Sales Manager and Mortgage Advisor of Finance of America.
Thank you. Jeff?
Morning, Jeff Wenzel with Desert Financial Credit Union.
Thank you. Mr. Freeman? Okay. We have Mark Freeman, City Council Member. Shannon?
Hi, Shannon Hines with Guild Mortgage, Area Manager.
Thank you. Robin?
Albert Romano, Marisol Federal Credit Union.
Thank you. Christy?
Hi, Christy Stokes, representing Chase Bank.
Awesome. Thank you. Rick?
Rick Stilgenbauer with Squire Patton Boggs.
Awesome. And Ender?
Hi, Ender Ganala, Outreach Coordinator with Senator Kirsten Sinema's office.
And we have a couple of people in the room.
Dorian Valente, Bankers Life Fiduciary.
Thank you.
I'm Bob Nelson, Communications Director for the Mesa Chamber of Commerce.
Thank you.
Great. All right. Thanks, Sally. Again, welcome everyone. So, Ender, first up, if you have some right on the top of the agenda. So, any update on banking issues from Senator Sinema's office?
Sure. Hey, good morning, everybody. Couple banking updates, few of them. I know the big thing for us the last couple of months, and I apologize if I go in or out at all. I can't believe I still have internet issues here in Phoenix, but it happens. We've been working on infrastructure primarily the last couple of months, and so I wanted to give a quick update on that. We'll give a couple updates on financial items, and if there's anything obviously that I'm not covering here, I am our outreach coordinator. I am not our financial services staffer, but it is my job to make sure that I know where your guys' concerns are and that we are working on them on our team. So happy to take anything back to our team that you guys have. But with that, we'll get started with just an update on what we did on infrastructure. Obviously, this plan here is going to make major upgrades to roads, bridges, rail lines, water systems, power grids, broadband, public transit, airports, and all sorts of infrastructure. And most importantly, without raising taxes on everyday Americans, with something like $550 billion of new spending on capital assets, right? Not inflationary assets, but assets that help all businesses for the next about 5 years. So some of those investments include, I'm just breaking them down. We have the Drinking Water and Wastewater Infrastructure Act, which invests $23.4 billion in aging water infrastructure, which is critical to Arizona. Invest in new technology and water security, which is critical for how we grow our businesses here. $110 billion for roads, bridges, and major projects. That's pretty self-explanatory. $65 billion in broadband grants to expand broadband access, affordability, and helps finance things like private bond projects for broadband infrastructure and other types of middle mile and last mile deployment efforts. We have $11 billion in there for highway and pedestrian safety, including significant investments in other sorts of safe street programs. $39.2 billion investment into the nation's transit system repair backlog. That'll contribute to something like 24,000 buses, 5,000 rail cars, 200 stations, and thousands of miles of track, signals, and other power systems. We have $17.3 billion in there for ports and waterways, which is critical even for our land ports here in Arizona and all the trade we do with Mexico. We have $25 billion in there for airport improvements. Every single airport in the entire state is going to get some sort of allocation here. This is based on a formula. That's fantastic. I'm hearing from rural communities across the state who are thrilled at the way this is going to support their communities. And that was our intention. We wanted to make sure everybody got that support. There's $47 billion in here for resiliency, $340 million for IHS sanitation services for our Indian communities, Indian country. That money can also be used for other sorts of construction, modernization, and renovation of sewer and waste lines. We have $7.5 billion in there for electric vehicle charging infrastructure. That's amazing. I mean, that's a huge industry here in Arizona, and that's going to make a big difference in terms of the kinds of products we're building out here. We have $7.5 billion in there for EV and low carbon school buses and other types of mass transit. $66 billion in there for passenger and freight rail, and an expansion of the Amtrak network. Who knows? If we can change the way people get to business, right? That's a big deal as well. And we also, this is a big one. We enhanced the Fixing America's Surface Transportation Law, FAST 41, which reforms the infrastructure permitting process. We all know regulations are burdensome, right? If they are not addressing needs or not creating good outcomes. And so for us, reforming FAST 41 was a big deal, especially as the senator has focused for the last 3 years on improving government regulation, getting rid of redundant regulations. I'll say the good news overall on all of this, right? These are all great things. But the good news is that this week, the House committed to passing or voting on this legislation, at least by September 27th. Originally, that was in question. The Speaker Pelosi intended to tie approval of this package into the larger reconciliation package being negotiated. So we're happy to see that the House is moving forward on a plan because this thing does have broad support, and it is what the people want. So like I said, the last couple of months have been focused on infrastructure and pandemic response, but there are a couple items I can share, I think, in the financial services space. In May, Senator Sinema unveiled her bipartisan pandemic risk working group during a Senate Banking Committee hearing, which examines ways to ensure that the United States economy is prepared to respond to future pandemics. This is going to happen again. Unfortunately, that's the reality of the world we live in. But making sure that we're prepared and we're accepting that reality and that we're better equipped, especially on the financial services side, is important. So in there, she highlighted that some Arizona businesses couldn't access the relief that they needed during the crisis, resulting in various closures and failures. And so, bankruptcies and defaults during the pandemic, I think, threatened something like $2 trillion in commercial real estate loans held largely by big banks, which forced those banks to set aside capital to cover those potential losses and tighten credit lines where those were needed. And so ultimately, she suggested that the government and the private sector, work together in the future here to create a risk-sharing mechanism that will ensure that banks recover in the event of a pandemic, which makes our financial services network more resilient, ensures that Arizona small businesses can access the capital that they need should something like this happen, even when theoretically those lines would be tightened. Also in May, Senator Sinema and Senator Lummis of Wyoming, a Republican of Wyoming, launched the bipartisan U.S. Senate Financial Innovation Caucus. This is a voting group of folks who are interested in responsible innovation in financial services to empower innovators and protect consumers while guiding regulators on opportunities, I think, again, in this financial innovation space. So issues that caucus would cover include blockchain, digital assets, artificial intelligence, machine learning, data management, consumer protection, combating money laundering, faster payments, central banking, digital currencies, promoting just good financial inclusion across diverse communities. I think the last update I wanted to give is that earlier this month, Senator Sinema helped to actually introduce for our CPAs in the room, the Fiscal State of the Nation Act. It's a bipartisan legislation that ensures members of Congress receive a financial report on how the United States and how its current policies are impacting its long-term fiscal health in particular. That bill is co-sponsored actually by Republican Senator Joni Ernst of Iowa, and Independent Senator Angus King of Maine, and it would require the U.S. Comptroller General to provide an audited financial statement and address members of Congress before a joint hearing of the House and Senate budget committees. So her legislation really is intended to ensure that Congress takes a sober analysis of fiscal health of our current fiscal health of our federal programs, and especially in light of the pandemic. And that bill actually has bipartisan support in the House as well. So we're hopeful that towards inclusion or incorporation somewhere down the line. But that's what I have on our end. I know that was a wide-ranging update. If there's anything, again, that I can help take back to our team, I'm happy to do so.
Okay, do we have any questions for Indra this morning? First of all, thank you for the presentation. And it's nice to hear the word bipartisan used several times. So I like that. So.
Yeah, take a shot every time we say bipartisan. I promise you'll have a great time. It's true.
I knew there'd be a fun game tied to that. So. Great. All right. Thank you so much, Inder. So really just had a couple issues that have been really on the some of the top banking issues that have been coming up, and some of these are bills that we'll see. Some of them are just issues in the industry, and others just looking for kind of updates on what you've seen at your bank. The first one that is coming up is interest rate caps, and this would be tied to the military cap. So the 36% all-in interest rate cap is what's being discussed. So I'll give you my initial opinion, and I'm open to your thoughts. So I understand what they're trying to get to here. The 36% all-in, I actually don't think I have an issue with that. I think it's the way it's calculated is what is going to have to come under a little bit of scrutiny. So the example they gave, I don't completely agree with. So I'm going to call on like Robin and Jeff here in a minute and just see what you do at the credit union and on a smaller dollar loan and how you handle that. But the way it's calculated now, the example they gave is if they had a $500 loan they made for 60 days, they charged a $20 administrative fee on it, and a 15% simple interest rate, it's going to assume that every 60 days you charge that rate, that $20 fee again. So it's counting it in there 6 times. And when you do that, so they're just annualizing that 60 days. And when you do that, that comes out to just a little under 40%. So at that 15% rate with the $20 fee, it would actually put it over that cap. I guess my thoughts, I don't have a big issue with 36%, but the way it's calculated, if there's only a fee charged once a year or that's all that's allowed, then that obviously wouldn't come anywhere near the 36%. So I think for me, it has to do more with the calculation, but this isn't really in our wheelhouse at Gateway. So I'm curious if Robin or Jeff, if you have any comments at the credit union, how you deal with some of the small dollar business loans and what that looks like. No pressure.
I'm sure that business loans are not small dollar loans. At the credit union, we have a 6-month term. We have a 750 loan, kind of loan where we charge an upfront fee. It's amortized over 6 months, and then it's less than 18% federal credit union, capped at 18%.
Robin, your audio is really bad. We can't understand anything you're saying. Jeff, you're muted.
Trying to keep my dogs out of the conversation this morning. James, I'll have to check into that on the kind of the retail business side to see what normal process is. It's my understanding, though, that we don't do real short-term loans. Generally, we'll put together a small line of credit with an annual maturity. We're even looking at 2-year maturities for the smaller lines, too. So I wouldn't think that the 36% cap is going to be an issue for us at all.
Yeah, I think that there's been a lot of pushback on it that it's going to reduce potential financing opportunities for those that need it. I'm not sure that I buy into that argument unless the way it's calculated is the problem. But at the bank, we wouldn't do any loans that had typically less than a 1-year maturity. So that fee multiplying throughout the year wouldn't be an issue for us. That's why I had a little hard time with that, because they were lumping banks, payday lenders, everything together. So on a payday loan, I could see how that 60-day renewal and fee would come into play. But it was really, they were worried how it would impact all the other lenders. So I guess my thought on that is that the 36% all-in cap makes sense. Just need to watch how that's calculated, or have a limitation on the course.
Have a term loan that's 6 months or more, you're not gonna run into a problem with that.
Okay, great. All right. Any other comments from anyone on the line on the, you can pass that on to Senator Sinema that, you know, really, I don't think that there's been a lot of pushback, more pushback than support. And I think there just needs to be a little more education on what that is, but I understand what they're trying to get to and to try to make this consumer friendly. And the thought was that it would not be consumer friendly if it cut off credit opportunities for a certain part of the population. So I think they just need to look at both sides to make sure there's no disparate impact there. So thank you. Next up was really, if a couple of you be willing to share, I'll just give you a real quick update on Gateway. So we're on PPPs. We did about, in round one, we did about 25 million in round one. We did 10 million in round two. We're fully paid off on round one. We've got about not quite 6 million left in round two, but we're expecting that to be fully forgiven too. So what PPP has caused us and probably every other bank in the country is massive amounts of liquidity. So since a lot of that money really truly never left the bank, so there's some issues with that, trying to figure out how to deploy that, but it has brought opportunities. We've got quite a few new customers over that. And so it's been overall, it's been a plus for us. Probably our main issue has been, like almost everyone on the screen, I'm sure, is liquidity and trying to figure out how do we deploy that and continue to stay in our lane with our same risk tolerance that we typically have. So I'm curious, a few of you on the credit unions and banks and other finance companies, what your experience has been with PPP, good, bad, any thoughts?
I'll just jump in quick. As far as Desert Financial, we did approximately just over 2,100 loans, 1,200 roughly in the first round and 900 in the second, total of about 79 million. Forgiveness on the front end on the first 2020 loans has gone very well, and we're starting to see forgiveness applications get processed for the second round too. We haven't had any issues really with the forgiveness process at this point. I think we've submitted about 1,400 applications for forgiveness to the SBA and haven't been denied on one, which is really pretty incredible in my mind. So yeah, we do have the same liquidity problem, James. Our loan to deposit ratio is surprisingly and small. So we're busy trying to figure out how to deploy that capital also.
Yeah, it's been, I think we've been, as a board at Gateway, we've been talking about how long it's going to take to burn through the liquidity. And fortunately, being in Arizona, we're in one of the few markets in the country that actually does have loan growth outside of PPP. So that we're pretty blessed to have that. But it's, we're thinking we're probably at least 2 years out from really probably right sizing the liquid piece of the portfolio, which is a little painful since, you're earning 5 or 10 basis points on those Fed funds and all that excess money. But I think that's, again, I'm thrilled to be in Arizona and have the opportunity to grow. So I think we're up 15% through July, which was double what we thought we'd be. So that's a plus. So thank God for Arizona.
We would agree. I'm sorry, I was just going to say we certainly agree with that. Our loan volume is up this year too. It's really been quite robust in the Metro Phoenix area. And the other thing to remember about PPP program for the lenders, it really was quite a rich fee-driven program too. So we have the opportunity to sit back a little bit and figure out how to deploy that capital and still be okay.
Well, you do have 1%. Robin?
Robin, you're muted. something going on with your audio. Do you want to type something in the chat room, because we can read your chat that way?
Perfect, thanks, Robin.
Christy, maybe Nathan, David, do you have any feedback on that? Any comments?
I'll come in. As you know, I'm not in the banking industry anymore, but we're the financial lending money out to guys that are flipping houses in the private money world. Most of you have seen, we're all deploying capital, gaining a market share. And so if you look in the market, I mean, there's so many more people using hard money and willing to pay that high interest. So we're all trying to gain liquidity. And so, you know, banks are lending to our funds. At the same time, hedge funds are trying to lend to us. It's just money's trying to get out into the market. And, you know, we're one of the ones that can get it out right now.
Thanks, David. All right, next up I have on here is staffing issues. So so the plus side is we have the loan growth and we have the continued deposit growth in Arizona. The downside is as we do that, we need to continue to increase our size of our teams. It's been difficult to do that. I've had 4 positions we're interviewing for right now. I have 2 that I just put out offers to last night. And one of them was actually, they were both taken by 10 o'clock last night, so I was thrilled.
Wow.
But it's been really difficult on the staffing side, so I was curious with some of your different companies you work with, what you've worked with through there when it goes to remote and hybrid. So, you know, a lot of the large national and regional, and even quite a few of the community banks have gone to either remote or hybrid schedules, and it's been difficult to get folks to come back into the office full time. So as a smaller community bank, to have the majority of my staff that wants to work from home is almost impossible for us. We do have 2 positions that are partially remote right now, actually 3, and I think that's going to continue. So I'm just curious with, you know, the talent pool we have here in Arizona and with the remote and hybrid, you know, related to COVID, have you had any difficulties with staffing? And if you have, what you've done to overcome that? And if you have extra people, will you please send them my direction? That's really why I had this on the agenda, so.
Any feedback, anyone?
I'm curious with maybe Chase as well and some of the larger institutions, what you know, if that's been an issue from small to large.
Yeah, so at Chase, we definitely had quite a problem getting people to come back. I mean, we actually had a lot of attrition during COVID, whether in branches at least, whether it be, you know, people wanting to not be in office and being transferring to positions that were working from home. And so now, you know, when things are getting back to normal, at least a little bit closer to normal, and we try to staff back up, it's definitely been difficult trying to get people to come back into branches. I will say some of our other departments that have the ability to work from home, they're starting to slowly transition to where they're maybe 1 week on, 1 week off in the office, so kind of rotating. But in the branch, we've definitely been hitting the ground, so to speak, you know, trying to get more people. We do hiring events and just really trying to get more people, get the word out, and restaffing our branches. So it's definitely been difficult, but we're starting to slowly get back to where we need to be.
Good. Jeff, anything at Desert, or things just humming right along?
Yeah, you know, it has been a challenge, James, and folks. People had gotten used to spending time at home, particularly young parents, and the daycare situation. And as we tried to move back to in office, it's been very, very tough. We've lost some people. There have been some banks that have advertised that, you know, you can stay at home full time. And I've heard that they've started to reverse some of that now. But my friends in the community too are, everybody's pretty much experiencing the same thing. We found out that we could do business remotely, and it's difficult to get people back in.
Yeah, I see Robin's comment on the screen due to the size and you really can't have the work at home. We are, you know, my business developers that can work from home, that's really not new to us. I do have a credit analyst that works long distance and that works well. But now we're seeing really strong on the loan operations side. Any position on the loan operations side wants to be remote, either fully remote or hybrid at best. I just filled my CFO position, like I said last night, but even at the CFO position, the C-level position, I would say of the 10 that I finally took to interviews and brought down, 8 of them wanted to be part remote or hybrid. And I'm just like, I've never seen a C-level position hybrid or remote, but that's something they're able to do now. And for a smaller institution, that's really difficult. So hiring has, you know, that's definitely one area where COVID has not been kind to us in trying to build that team back up. So I'm not sure what gets done there in the future. We also, you know, there's also some security issues with having, you know, so many people working from home as well, depending on what kind of sensitive material is, who it is. Obviously, the CFO is going to have a lot of sensitive material. So it'll be interesting to see how that plays out, but that definitely has been an issue for us, and some of the other community banks that I work with on a regular basis have had the same issues. So I think all of us have a fair amount of open positions. So this is probably as many open banking positions as I've seen in a long time. And when people call me and they're like, hey, do you know anybody that needs some? I'm like, I always know somebody that needs, you know, an operations, CFO, CSR, anything. So there's quite a few looking at, you know, Alliance, I don't think Alliance is on the call this morning, but I know they went hybrid or they went remote. And then when they came back in office, those folks didn't want to come back in office. And we saw a lot of them leave. We interviewed several, but they aren't interested in coming back into any institution face-to-face at all. So.
Can I ask a question?
Yes.
I'm kind of an outsider here. I don't really work in the direct banking industry, but I heard two problems next to each other, and I'm wondering if you can incorporate it into one solution. You have a liquidity problem and you have a hiring problem. Is it possible to use any of those funds to generate some extra interest in, you know, bringing them back in, or even hiring events and doing extra things like that?
You know, the pay has not been the issue. The interesting thing on the hybrid work is the folks that are willing to work hybrid, at least that we've talked to, are willing to work at a discount to be hybrid. I think my average wage at the bank now is about $115,000 a year. So, and I still can't fill the positions. So it's been, you know, we've really made the packages really attractive, and we have tried on different events to try to get folks in, and it's just been really, really good. And the main issue, it's not money, it's wanting to work from home.
Good morning.
Good morning, Diana.
How are you?
Hey, it's almost perfect timing, so I think we're.
Clock.
What?
There's no clock in here.
There's no clock, yeah. And I was gonna look at my watch, but I don't have a watch, so. Diana, thanks for being here. Diana is from the ABA, and it's just a great transition right now to have you come in and chat about the Bank On certified account. So if you're ready to go, that'd be great.
Okay. Let me see if I can figure out how to share my screen. Let's see. Okay. Do you see the entire thing, like the slides on the right, on the left too?
Yes.
Okay. Let me figure. Okay, so let me stop. Sorry. I'm a millennial, but I should know how to do this from a technical standpoint, right? What if I do slideshow?
Thanks, man.
Okay, sorry, I'm trying to figure out how I can talk to you all and show you the slides while also, oh, I think I know, but not, but also be able to see the notes. I think I've got a PDF. Here we go. There, okay, very good. So let me share the PDF screen. Share. Very good. Can you all see that?
Yes.
Perfect.
Okay. Let me get it sized correctly.
Perfect.
Yeah. Okay, perfect. All right. Thanks for bearing with me on that little technical glitch there. So I'm Diana Banks. I'm a vice president and senior counsel at the American Bankers Association, where I work on fair and responsible banking issues. So that is a variety of consumer compliance issues. I work on MDI policy as well as financial inclusion issues as part of my work at ABA. So I'm really, really pleased that you all are interested in Bank On. Our head of policy at ABA, Naomi Camper, serves on the board of Bank On. She also worked extensively on Bank On when she was over at Chase's Foundation before she joined ABA. We believe strongly that Bank On is a great way of addressing financial inclusion issues. And so I hope I can convince you all of the same and answer any questions that you might have. So let me see how I can best do this. Okay, does that make it, if I do that, does that make it also small for you all? Or do you see it the same? Go ahead.
That's it in half.
It cuts it in half. Okay. Sorry. I'm just trying to figure out how I can actually, and you all don't see mine. You still see the PowerPoint, correct? The first slide. Okay. Let's see. So if I page down, does that, no? There we go. Being Bank Matters.
That's it.
All right. So we are really proud to represent. Oh, did it stop the screen share?
Nope, you're good.
You're good.
Oh, okay, you can see it. Great. Okay, sorry. So we're really proud to represent the banking industry in Washington, and being banked really matters. And I want to say I'm saying banked here because we are ABA and we represent the banking industry. I know we have a broader swath of financial institutions on this call. But when I say banks, I mean depository institutions generally, right? So we don't always see eye to eye with every policymaker, but we really think that the financial services that depository institutions offer to customers and communities across this country is very, very important. And so a banking account and banking relationship is really a foundation of economic opportunity. And we think that that's something that should be available to every American. So we also, as a note, we see a lot of policy proposals that are now promoting substitutes to bank accounts. So, fintech, payment apps, Fed accounts, postal banking. And we think that those really kind of undermine the primacy of bank accounts as a lifeline in the financial system that we have here in the US. And we also think that those options really aren't great for consumers. And so for the most part, the rationale that people offer as to why we should have those kinds of substitutes is because, well, bank products and bank services aren't reaching all members of every community. And so we really expect those kinds of policy discussions to continue. And so that's another reason why we are really, really invested in the success of Bank On as a way of promoting financial inclusion that's based on the banking system. So as you can see here, we've got some stats on how much in fees it tends to cost the consumer if they're using alternative financial services like paydays and what have you. And then 8 times is the Cities for Financial Empowerment, which is the nonprofit group that oversees Bank On account certification. That's what they find that the number of times that clients get financial counseling if they have a bank account versus if they don't. Too few Americans are banked. So you can see here, I think the latest FDIC numbers are that 7.1 million American households are underbanked. And as you can see, that the demographics of who those groups are tends to skew heavily towards persons of color in the US. And so again, another reason why policy proposals, especially in today's current climate, are really pushing towards inclusion on this issue. Let me also note that the FDIC data has been showing a trend that we're making progress in reducing how many households are operating outside the mainstream. But again, the data is very clear that it's excluding certain populations, which is not what we want. So the solution that we think works for both consumers and for depository institutions is bank on certified accounts. And so the reason why we feel strongly about these is because they're designed to both work for consumers as well as for the institution. So it's a low fee, not no fee, but low fee account that's really designed to address the primary reasons why households are actually underbanked. So as you can see here in the chart, the reasons why people don't have a bank account is that usually they don't have enough money, or they've had former account problems, or they don't trust banks, or the fees are high, it's privacy. So the bank on account standards address those issues. They offer checklist checking. So you don't have so bank institutions can offer to issue checks if needed. So for example, if someone opens an account, they say, my employer needs a voided check so we can do direct deposit. You can issue them a check so that they can provide the paperwork to the employer. But it's considered to be checklist checking. You can charge a $5 monthly fee. The fee can be $5 if it's not waivable. You can charge up to $10 if it's waivable with a certain number of debit transactions or whatever criteria you may want to put in. You cannot charge overdraft fees on a bank on certified account. That's a big one. The accounts are allowed to go negative, but you just can't charge a fee for it. It should come with a debit card, which obviously offers the interchange fees for the institution, but is also very convenient for consumers, and a low opening deposit. I believe right now the current number is $25 or something like that. So very, very low, low deposit fee. So it was really designed to work for banks, right? You're allowed to charge fees. It does not have to be a free account. And so this is important because it needs to be sustainable. And the way we also think about it too is that this really is designed to bring in new customers. A lot of times people think about Bank On and the low fee account, they're thinking LMI customers. And while that's very important from a financial inclusion perspective, I'd also encourage you to think about younger customers. I mean, right, so we have now a whole generation of people. My daughter is a freshman at she's a sophomore now at Howard University. She doesn't really understand the difference between a bank account and Venmo, right? Even though I worked in the industry. And so I think that's true for a lot of young people. So you want to think about your potential customer base as being broader than just LMI. And then, our big thing here is that it really allows you to bring in customers who otherwise don't get the safety and convenience of an actual bank account, right? And CFE has also pulled together some statistics on the average number of monthly deposits and how many of those Bank On customers are making debit transactions and obviously then generating interchange fees for the institutions that they bank with. Number of Bank On certified branches. This isn't super relevant, I think. Let me move on to the slide on Bank On movement support. So right now there are over 100 Bank On certified accounts, which is great. 60% of certified accounts were opened by customers in neighborhoods with 50% or more minority populations. So that's big because it's really getting at the financial inclusion issue. Financial institutions with a Bank On certified account are more than half of national deposit market share. And there were nearly 2 million accounts open in 2019. So this is generating a lot of new accounts, and it is really generating, it is moving the needle in terms of financial inclusion. these accounts really have broad appeal because they are low fee and fairly simple to use and understand. Another thing, so I'm skipping that one. Another thing I want to emphasize is that bank-on's a really important measure of progress in our campaign has been to increase the number of community banks and small institutions that are offering certified accounts. So as you can see on the chart, that number has really been growing. Sometimes those who are familiar with bank-on and certified accounts already, they really think it's a big bank thing, right? Like, oh, it's easy for Wells and Chase to offer this, but what about my institution? And so we worked very hard with the core providers, ABA as the trade organization, to make it so that institutions could offer a bank-on certified account and not have to, essentially pay a lot of extra money in order to be able to do so. And so the cores have been very responsive to our efforts because this is about broader financial inclusion. We have 20 cores who have agreed to help on this. They represent about 80% of the community bank market. Our goal was to really have this be as turnkey as possible, right? We want to make it easy for banks to offer the accounts. We would encourage you to call your core and ask them to help you get this set up. Some cores are building it as a default account setting, but we are also, telling people, reach out to your core, whether that's Jack Henry or Fiserv, whoever you're working with, reach out to them and say, hey, we want to offer a bank-on certified account. Can you help us? And we're also taking feedback on that because obviously we know that, the cores will say, oh yeah, of course we want to do it. We want to help, but that doesn't mean that trickles down. So if we do take feedback on that. And so if you are having an issue with core on it, we'd like to hear about it. Last thing, free certification really, it benefits banks because of the way the Bank-On Coalition is organized. It's organized at a local level. So there tends to be a lot of buy-in from local nonprofits, local community and political leaders who work with underserved communities. And so if you join a coalition or if you all start a coalition in Arizona, you can expect a lot of engagement from folks on the ground who will then be pushing customers to your bank because they know that you have a certified account. It's a product that has in-demand features. I think as we all saw during the pandemic with the economic stimulus payments, people were very aware of the need to have direct deposit. And that's continuing now with the child tax credits. As people are hearing more about that and they want to have access to those funds, they're looking to get a bank account. And then we have a screenshot here of the IRS's webpage, which actually has a link to Bank-On and it has a link to certified Bank-On accounts that can be opened online to make it really easy for people to receive their child tax credit. So I know I've spoken really fast, but hopefully I've addressed a lot of the questions here. So you can go to joinbankon.com certified to learn more about getting a certified account. Again, reach out to your core provider. They should be ready and able to help you get an account set up. Another thing we found is that many institutions are offering accounts that are pretty close to certification, but just may have one or two features that need to be changed. And so if that's the case, it can be fairly easy for you to get to having a certified account. Then you actually certify with Bank-On and they give you that magic stamp of approval. ABA has an inclusive banking website for bankers. If you want more information on just inclusive banking in general, we have some information on our page. And then we also, our foundation has a page for external audiences and consumers about safe and affordable accounts. Oh, and then it's not on this slide, but I will put it in the chat, but our email address is bankon@aba.com. So again, if you have questions or issues, bankon@aba.com, we're happy to help. So I'm gonna pause there and catch my breath. And are there any questions?
First of all, thanks, Diana. A couple comments and then questions. So some folks on the call probably knew what LMI was, some don't. LMI is low to So we use lots of acronyms. So just in case you didn't know what it was. And then, first of all, is it possible to share that PowerPoint presentation?
Yes, absolutely. I will. What's the best way for me to do that? I have it as a PDF, so I can just send it to someone.
Yeah, when we worked, so you can Sally Harrison or Bob Nelson at the chamber, and then they can get it out to the rest of us. That'd be great.
Harrison.
I guess one of the things I have on the bank on accounts is I saw the number 2 issue for not opening was trust, and how do you jump that hurdle, or what do you do to build that trust in the community and convince folks that this is a better option than not having an account and paying all the additional service fees?
Yeah, I mean, that's a tough one, right? I think it really depends on exactly the circumstances you're dealing with, right? So if someone's actually walked into your branch, obviously that's going to be a different conversation than if you are going to a group of potential customers and making a pitch to them, right? If someone's actually walked into your branch, they're open-minded enough that they're there. So at that point, it's just a matter of showing them, hey, we're glad you came in and we want to serve you. Getting people to the point where they're comfortable walking in and feeling like there's going to be something there for them is a different matter. And I think really that's where CFE, the Cities for Financial Empowerment, which oversees Bank On, and the local coalitions can be really powerful, because a lot of times they're bringing in the community groups, they're bringing in the church leaders, they're bringing in the on the ground political leaders. And those people are the ones who already have credibility in the community. And so once you've talked with them and they know who you are and they know your institution, then they put the word out there that, hey, you should go to First Bank of so-and-so over on Main Street, and they'll help you out, right? So I would encourage you all, if you haven't, to think about pulling together a coalition on the ground with a number of institutions who will all offer accounts. And then you can work with your state and local leaders there to get the message out to the local community about it. But yeah, it's a tough one, right? I mean, it's something that didn't happen overnight, and so it's not going to get fixed overnight. It's just going to take a lot of work for people to show and to prove that, hey, we're open for business, and we want people to come through our doors.
Great, thank you. Any other questions for Diana this morning?
I've got a few, but I can wait if everybody wants to take priority, because mine might be a little bit beginner status.
No, go ahead.
Oh, not at all.
What is a certified account? The certification, what's the benefit to it to the consumer?
So the benefit to the consumer is that it's a simple, easy to use account that has pretty robust features, right? So one of the things ABA is trying to do is promote Bank On certified accounts. So that way it's known as a brand. Like if I get a certified account, then it's going to be an account that's not going to charge me overdraft fees. I'm going to get a debit card, right? Like I'll have these certain capabilities that consumers have kind of come to know and trust. The certification process itself is overseen by Bank On and the Cities for Financial Empowerment. Let me share my screen, because I've got so these are the account standards, right? So you have to have certain features. So you have to offer a debit card. You have to have a small minimum opening deposit. So they say $25 or less. The monthly maintenance fee can only be $5 or less if it's not waivable. If you have a waivable fee with 2 options to waive, so for example, if you have direct deposit, then you waive the fee, then you can charge up to $10. You cannot charge overdraft or NSF fees. And you cannot have any account activation, dormancy, inactivity, low balance fees, just because that's, obviously one of the things that's trips up folks is that they may not use their account on a very, very regular basis. And so certification does involve not charging a fee for that, so that way they can maintain access to their account. And then you have to offer branch access if you have it, and offer ATM access in network at least, but you can charge for out of network. So those are the core features for the standards. And then there are some recommended features which you don't have to have for certification, but they do, but CFE does encourage you to offer. So for example, money orders, making funds available on an immediate basis if your customers are cashing, if they're cashing like government checks or payroll checks or checks from your financial institution, so, for example. So the answer to the question is, we're building the brand in terms of consumers knowing what the benefits are of a bank on fund, of a bank on certified account. I will tell you this, here in Washington, policymakers, folks at the FDIC, the OCC, the Fed, they know what bank on is, they know what bank on accounts are. And in a lot of local jurisdictions, people know what those are. So for example, Atlanta is a big coalition center for bank on, and the mayor of Atlanta knows very well what a bank on certified account is. She knows the institutions in her community that are offering bank on certified accounts, and she looks at them favorably, right? So it's an important on the ground service that's being provided in those communities.
I think that's great. That's going to certainly help you achieve what I think you're looking to do. Is this already live, or is this just a push?
Oh, yes. Oh, yeah, this is a thing. So you can go to cfefund.org, bank on, let me pull back up that, the PDF. Oh, wait, that was it right here. Share. And then these are, and I will send these as live links when I send over the slide deck.
How long has this been live and going?
So Bank On was started in, I think, the early 2000s. It's been around for a while, but it is just really, in the past couple of years, picked up a lot of steam as ABA especially has gotten involved in pushing to our membership, hey, these exist, you all should offer an account. Again, we've been working on it because from a policy perspective, everyone is now pushing these alternatives, right? So we should have postal banking, we should have this. And no, I mean, we have a robust financial system that already exists. We just need to get more people into it. And so Bank On has been a big part of that.
Certainly the first time I've heard of it, and it seems like a pretty big deal. So I'm surprised to hear that, but.
Yeah, well, that's why I'm here, right? So.
Nathan?
I mean, yeah. So, Bank On's a great program. We've been involved with CFE and in the Bank On movement. And so just a little commercial for BrightFi. ABA did recognize us earlier this year as a Bank On certified core provider. So if there's anybody in the group that's interested in exploring that, we're happy to have that conversation.
Great. Okay, thank you.
Can I ask one more question on the consumer side? So the NSF, so if a depositor goes and makes their payment on their water bill, their electric bill, everything at the same time, it goes to NSF, is all that it's doing, it's just not going through, and then they're not getting charged a fee at all? Is that,
Correct. So the account standards don't expect institutions to pay money that's not there, right? But it's just that you can't charge consumers a fee for if they do it.
And then you mentioned that they would be able to put in that they wrote a check, or that it would my question is, would it help them balance their checkbook that it actually comes out of the account earlier, or does it not come out of the account until someone cashes that check?
So my understanding is that most institutions that offer Bank On certified accounts make them checklists, right? So they don't actually give, because checks are kind of hard. I mean, probably all of us have bounced a check at one point in life, right? And we're probably all pretty financially savvy. And so it's really the debit transaction, which is live and at point of sale, can be declined. So I think it's up to institutions' discretion how they want to handle that, right? It's up to discretion now how different institutions will order payments and funds subject to regulatory requirements. So I think there's some flexibility there in terms of how the CFE fund allows certified accounts to address those issues. But, you know, a big point and selling point for consumers on it is that there are no overdraft fees, there are no NSF fees, because most of these consumers are folks who have been burned by that in the past, right? So, you know, they bounce 2 checks, so they've already bounced the checks, and then they get the fees on top of that. And then they're, you know, usually if you bounce, like if you bounce your check with the water company, they charge you a fee too. So, so lots of them have been burned on that.
And Nathan, just since you guys are on there and doing that, how has that affected profitability? I mean, I'd assume that swings to, you have to make up for it in your interest rate spread then.
Well, look, and in full disclosure, I'm not a banker. I'm the government relations guy, but I will tell you this. You know, we're a little different. We're a technology company, and we've basically we configure and deploy low-cost digital banking products. And so, you know, this is a natural for us because we are able to make those customers that are really targets of the Bank On program profitable to banks, just based on our ultra low costs. So,
okay, good.
If you want to get deeper in that, we'll have to get some folks who know what they're talking about on the call. Okay.
No, that's good. Thank you.
Sure.
Yeah, I mean, to the greater point, which I think you're addressing, David, is the accounts are designed to be profitable. That's why they're allowed to charge a fee. That's why you know, they require debit, so that way interchange fees get generated. It has to work for the institution too, right? So yep, they're aware of that, and they account for it in the certification standards.
Great. Any other questions for Diana this morning? Great. Hey, Diana, thanks so much for your time this morning. We appreciate it.
Yeah, thanks for having me. I will put my email in the chat here, so feel free to email me or email, like I said, the Bank On, which I check that too. But there's a team of us at ABA who are working on Bank On. And so if you email the Bank On account, you probably get a faster response because there are like 10 people.
Great. All right. Thanks so much.
Thank you all. Have a good one.
Thank you. So really the last couple items on here, I had overdraft fees, which is kind of interesting since it just follows the discussion we just had. And there's been a lot of articles out recently of some of the banks that have gone to not charging. I think Ally was one. It's just to give you an idea, so for Ally, it is a piece of their income, but it's 0.0007% of their income if they gave up all their overdraft income. So probably be similar for us. Our overdraft income is very, very low. But what's interesting to me is Nathan, maybe you can comment there as well. I think some of the banks that have talked about going to the point where they no longer charge overdrafts on any accounts are going to a minimum monthly fee, which, depending on what the size of that minimum monthly fee is, that, in my opinion, could have some of the folks that normally have solid accounts and would never have an overdraft kind of underwrite all the rest of them. But it depends on what that fee is and how reasonable it is. So how do you structure that at BrightFi?
Good question, and above my pay grade, so I apologize, but we can certainly answer that question and get some information out to everybody on the group.
I don't know if anyone else has any comments on overdrafts. I didn't really want to spend a lot of time there. Rick, I know you've been on the call this morning. Do you have anything for the good of the order this morning?
Like normal, James, no. You know, one issue that Indra and I were just talking about offline here is the concern regarding the 1031 like-kind exchanges potentially going away within the infrastructure bill. I'm a big fan of the infrastructure bill. I think they've done a fantastic job. Senator Sinema has been a tremendous leader in that, and it's been fantastic. One of the pay-fors in that is getting rid of the 1031 like-kind exchanges. I've had a lot of conversations with realtors and with agriculture leaders around the state, mining, as well as some higher education folks. The realtors, of course, are impacted by it substantially. But I was curious if that going away is on anyone's radar from any of the banking entities that are on the phone.
It would be for us. I mean, that's, not the majority of the transactions that we handle throughout the course of the year, but it would impact a fair number for us.
Yeah. Okay. Well, if there's a coalition that's been developed of impacted parties around the state, and most of it is, agriculture, higher education, realtors, things like that. But if you'd like, James, I can send it out to you to potentially, if there's interest within Mesa Financial Network, to potentially being a signer onto that coalition to encourage that those do not get taken away would be really good. But no pressure, no big deal.
I appreciate that, Rick. Thanks for doing that.
Thank you.
And then are there any other, for our next meeting, there's always going to be plenty to talk about on the banking side, but are there any particular topics that you would like us to research and cover at our next meeting? If not, you have to live with what I'm going to pick on there, but I'll always work on the most current events, so.
How about crypto and banking?
Absolutely, that was, we've talked about that, so.
Yep.
There's actually, there's a bank in Las Vegas right now that was purchased by a gentleman that made a fortune on crypto. And so the bank's having an interesting transition now, and I'm sure that has to do partially with the regulators, trying to figure out how you blend crypto and banking. So they've spent a tremendous amount of money on R&D, but when you have a billionaire that's backing it, you can afford to do that. So I've kind of been following that to see how that works. Matter of fact, it might be interesting. Let me see if I can get somebody from their tech team to talk to us about what they're doing. That might be really interesting. So. I know they have, it's a bank that is it's about half the size of Gateway, but it has a team that's about the same. 5 of their 15 team members are tech. So, which is highly unusual, but it'll be interesting. I'll get them on the next call. I think that'd be really interesting. All right, anyone else? All right, thanks for your time today.
David?
Hey, James, I was just going to throw out, I mentioned it earlier, but our industry being the private lending world, there's the banks, the money that's coming in, I'm just worried that it's coming in from outside markets. So I'd rather it be supported by our own markets. In Arizona, I mean, I was just listening, Capital Fund One is my biggest competitor, and they are funding in Arizona alone $90 million worth of hard money loans this month for single family residences. So, myself, I'm doing about 10 million this month. And so you add us all up, we're making a huge difference in the market, but we're being limited to our debt options. And so we're starting to get money from, Wall Street, it's coming in from overseas right now. And so I would love that our local areas support us as we are. Honestly, I feel like we're the ones that are able to use our infrastructure to improve the communities, one house at a time. And so we'd love to obviously have that support. Western Alliance Bank is one of the biggest in the industry that is a bank that is supporting us. Other than that, it's starting to come in from elsewhere.
Okay. Yeah, and maybe on what that looks like, David. I think that would be good to have maybe have you talk about what that looks like from the banks or credit unions that decide to make an investment in that fund, how that works, what it's structured, what it looks like, and because we're all looking for ways to deploy our cash. So even when I joked about the 1% PPP interest rate, I'm like, okay, 1%, 10 times better than the 10 basis points I'm getting from the Fed. So you're always looking for ways to deploy that money, and we're like a lot. We've invested a lot in our bond portfolio. I mean, really in the last 18 months, our bond portfolio has grown from about 40 million to about 70 million. And, you're looking at yields there typically, what we're looking at in the 1% to 2% range. So I think depending on the quality of the funds and the track record, that there probably would be some interest from local institutions.
Yeah, I'd love to do, 10 minutes to let you know. I mean, I'm pretty well connected within this industry. Could give you what we're all looking for, what's being offered to us, and then just see if it's something that, as an industry, you're interested in and how it can help us. So.
Yep. All right, everyone, thanks for your time this morning. Indra, again, thanks for the presentation, and please pass along to Senator Sinema. We appreciate all the hard work and the bipartisan, and I'll take a shot of my latte. So great. Great. Have a wonderful weekend, everyone.
Thank you all.
Yep.
Have a great
Bye,
Friday,
everybody.
everybody.
Take care.
Stay connected to Mesa Chamber social media, email newsletters, Monday morning message, and mesachamber.org to always know what's happening at your Mesa Chamber.